Prateek Agarwal, business head and CIO at Ask Investment Managers, now joins in on the show. Prateek, hi there. Good morning. Thanks for being with us. To begin with, what's the sense that you're getting for the year ahead? Are you optimistic on the prospects of the equity markets? Because we've been marred by quite a few events for the year gone by, be it on the global front or even macros. Going forward, what's going to take center stage?
For the broad market, I would say we are very cautious. This is a year wherein at the beginning of the year you are looking at more than usual set of issues. You are starting the year looking at trade wars, you are looking at a Brexit, you are looking at tapering by more geographies, interest rate increases, elections in India, etc. So more issues than what the markets really look at on the first week of the new year. So I think we start the year pretty cautious on the market as a whole. We do believe that global growth would be a tad lower than what we saw last year, and which has various implications on commodity prices in general. Which then leads us to believe that users of commodities with pricing power, let's say FMCG, durables, etc., should end up doing better than other spaces in the economy.
All right, that's the view on the overall market. Let's talk about individual sectors, particularly banks. How are you reading into the share swap agreement for Vijaya, BOB and Dena Bank? Do you think that it is unfair for shareholders of Vijaya as well as Dena Bank and only seeks to merit those of BOB? What is your assessment of what this means? And, taking into account how these banks have performed over the last couple of years, how are you looking at this development?
Yeah, so any share swap agreement has to be fair and there has to be a rationale behind it, which I'm sure would be existing for this share swap as well. One should not be looking at the current market prices rather than be looking at when the swap was first proposed and the relative strength of the franchises. It is no longer a done thing that you assume that everything will be merged at, let's say, one price to book, etc. There are weaker banks, they are being bailed out, and it has to be seen in that context rather than mergers of very capable growth oriented entities, etc. So there is one strong entity, the others are weak, losing market space, not able to grow. And hence they are getting merged, and we really believe in that context it is fair.
How big a role do you think election uncertainty would play out, Prateek? Or would you say that this could be at max a 3% nifty mover, and beyond that it will be back to square one, back to valuations and back to earnings?
Yeah, so this is a worry that markets have been grappling with, and the thing with the equity markets is that they can hedge. So if overall the worries are very high and you believe there will be a 3% cut, it is from what level? And if you really believe there is a risk that needs to be taken care of, one can go and buy a put of a May, June kind of a period. We looked at that space and a month, 2 months back, and it was like 4.5% priced. So that is how it is. So that's a good thing with equity markets. If there is an issue, there is an ability to hedge. That said, we believe elections are an added set of economic activity. consumer oriented, so advertisements happens, banners happen, rallies happen, monies get spent, and consumption gets helped. So we are really looking at that part of the market. We believe markets will respond to earnings growth. The part of the market which almost certainly will respond positively to elections is the consumption space, because that's the space where earnings growth should happen given the higher spends that happen in the election period over and above the focus on spending in the budget, etc.
And what's the sense when
So look at elections as an economic activity rather than anything else.
Okay, an economic activity, and the fears seem to be overdone, according to you. What about the export-oriented companies, largely on account of the way the currency is shaping up? What's the sense you're getting?
Yeah, so for most of our competitive countries, the move in the currencies has been similar. So in terms of Indian exporters gaining anything on the currency front, well, broadly no, except in spaces where we are very strong. So yes, overall from 64, 65 rupee to a dollar at a 70, an IT space would have gained. And let's say pharmaceuticals, the two spaces where we any which ways have a lot of strength, would be seen to be gaining, as also would chemicals, where we see some amount of business moving from China to India. So these three spaces stand out, but otherwise one should also remember that we are looking at a world where each country is looking at the domestic market and trying to spur domestic manufacturing to take care of the domestic demand. So protectionist tendencies are moving up, and to expect very strong growth in exports in such a scenario is difficult. Except for the spaces that we spoke about. Aquaculture, the other space which showed very strong growth over the past few years, should undergo a period of consolidation in this year, given the fact that once again compliance costs, etc., are moving up for it in geographies like the US.
I think, what is it that you're making of this lag that one is seeing in autos across the board? If you look at the monthly sales data for the last 3 months, there's been a consistent slowdown, and one can feel that in the stock price as well.
Yeah, so let's look at it this way. What are the major markets for autos? So yes, a lot of the growth is happening from tier 2 towns, etc. But the major markets are still the metros, and in the metros for last 1 to 2 years, it's been a crazy thing to buy a car. You can't drive it. So I would believe that many are simply postponing that decision, as they should. So that's one. Two, yes, last 1 month we did see a very, very sharp slowdown. We did not expect it to be as severe. To some extent it is because end of the year issues. People who have shown better numbers may have discounted more, and people who have shown a sharper crack may not have discounted to clear inventories, etc. Plus the fact that credit was not available or less available in this period versus usual, so that again would have impacted sales. So now that credit markets have improved and normalized to a big extent, let us see how the new year January goes. In case January also shows a slowdown, then I think that will cause worries to move up very sharply. As of now, we are happy to wait out a month.
What's the story when it comes to Jet Airways in particular? You know, they've been struggling with their overall cash flows for quite some time. The rising fuel costs, they've defaulted on payments as well. And now we understand that the promoters may have to give up the management control if they want to raise capital, according to analysts. How do you see the situation shaping up? Is it going to be a prolonged process? And thereby, what is the expectation in terms of movement for the stock price?
Yeah, so, I'm not answering your question directly. I don't do single stocks, but let's look at it. In the past, if the spotlight on PSU banks, public sector would not have been as high as it is as of now, maybe an ILFS issue would not have happened and it would have been bailed out. Maybe a jet would also have been bailed out. At the end of the day, you can't have a situation where the whole Indian market is serviced by one or two dominant players. So, but then, it's a risky thing to lend to a airline which seems to be going down, and very clearly the risk appetite that we see with bankers has diminished, and rightly so. We don't want that money to be squandered away. Which then leaves weak management, very few choices. The more they delay, the weaker their bargaining position becomes. And the writing can then become very, very clear if put in that kind of a situation. To my mind, the faster one gets a partner, the better.
Okay, fair point. Great to have you on the show, Prateek. Thanks so much for taking the time out.
Thank you.